Hello traders, welcome back to lesson number 6. Lesson number 6, we are going to be discussing labeling and how we label our charts. So let's get straight into it. So Elliott actually did a lot of good work, but since then obviously we have evolved, and of course our theory is based off a lot of stuff from him, but it's not exactly the same. So what Elliott gave us, let's say you get this impulse, consolidation, impulse, consolidation, and an impulse. So the labeling that Elliott gave us, he gave us 1, 2, 3, 4, and 5. And then he also gave us, your ABC. And then he also gave us W, X, Y, X, Z. So basically, these are the labeling that Elliott gave us. And you will see that, and this is the big argument, what a lot of people have, and I also have this, this same view on it. If you take 100 Elliott wavers and you asked him to label a chart, out of those 100, maybe 10 or so will have the same labeling, and the rest will all have different labeling, and that tends to be a big problem. So the way we teach it, if we take 100 traders and we get, say, 70% of the traders know our theory very well, then 70 out of that 100 should have the same labeling. So now I want to discuss his 1, 2, 3, the way you labeled 1, 2, 3, 4, 5. And if you follow his rules, he said that in each impulse there should be 5 sub-waves. So let's say they labeled this 1, 2, 3, 4, 5, and then each impulse should have 5 sub-waves. So then on a low degree you should see 1, 2, 3, 4, 5. And then in this one too, 1, 2, 3, 4, 5, and then in the last one too, 1, 2, 3, 4, 5. So in each of these impulses over here, you must have 5 subwaves. And this is where the big problem comes, because if you go and look in any charts, any stock, any currency, I have yet to encounter this, and this is I think what gives a lot of headaches to Elliott wavers. So once again, I'm not knocking Elliott wavers, but there is some a lot of things that doesn't make sense, and we just took the good parts of the theory and we incorporated it into our theory and made things a lot simpler. If you also go read up about the Dow theory, he came to the conclusion that the market moves in 3 waves. And if you go look at the charts, this is actually more accurate, because in most structures is 3 waves. There's much more 3-wave structures than 5-wave structures. So here's our rules for labeling. So you get your impulse, you get your consolidation, and then you'll get your next impulse move up. And if you see divergence at the top on your MACD on these 2 impulses, then we will label it as ABC. ABC like that. And because So why do we do this? Remember this, if you get divergence, you label it ABC, and we know that either two things are going to happen when you get to ABC. Either we are going to make a much bigger correction, and this will form one move, one impulse, and then you'll get your next one, or this is the end of the structure and you actually will get a complete reversal to the downside. So this is the rules for labeling ABC. When you get divergence, you will measure it ABC. So what if you get a 1, 2, 3 and between these impulses there is no divergence? So this is the second rule, guys. You can write this down. So what we will do then is you will label this WXY. And so why do we label this WXY? If there is no divergence between these two impulses, we expect it to make another consolidation and another move up. And once this happened, you will then label it WXYXZ for the complete 5-wave structure. So remember this, guys. When you get a 1, 2, 3 and there's no divergence, we'll label it WXY. So it is very rare, let's say you get a 1, 2, 3 move and you do have divergence, then this will become an ABC. It's very rare that you will actually get another correction, and I'm not talking about a bigger degree correction. I'm talking about the same degree correction as this, and that this will continue up. If that happens, this will normally be the case. So the only rare instances that it will make an ABC and continue going up is if it starts forming an ending diagonal, or if it starts forming a channel like this, which will become then, can you remember the ABC squeeze? But either way, after a while, you will still get the move, you'll move down your reversal and then continue to go down. So the other thing I want to also say is, how are we going to look at it if you get a very, very, very sharp peak like this on your MACD? When you get a very sharp peak like this on your MACD, the chances are very high, I would say 80 to 90% chance that the structure you are forming is going to be an ABC. And we will go into the charts now and look at that. So let's go into the charts and just look at that. So let's go, let's take the Great Britain pound CAD, doesn't matter. And then not to make bias, let's remove all the drawing tools, not to create a bias in the market. So let's start on a monthly and let's see if we can see something. And monthly, we don't have a trend. Let's go to the weekly. Let's see if we can see a good example. Let's see here. Not quite. Let's go to the daily. So for instance, like let's see, we can't really take that as yet, unless if we look at this as an expanding flat for this move up. Okay, so basically look at this sharp peak. If you get something like this, the chances are that you are going to form an ABC is very high, and as we can see, that is what happened. We formed the ABC, and now we are reversing down to the downside. So let's go back in future and see some more examples. If we can see even here, but not quite. That's one impulse move. If you go and filter, you'll probably find that it's one impulse move. So here's another good example. I mean, this would have become one move, and I mean, look how sharp this peak is for this impulse move down, and then we had our correction down, and then we formed the ABC. So this would have been our ABC. So what I'm trying to say, guys, if you see a very sharp peak on your MACD, chances are that you are forming the ABC is quite strong. See here, it was clear to us that we were getting continuous divergence, that we formed the ABC, and if we go back, we'll probably find that eventually this market reversed to the upside. Its chart is very compressed, so let's just decompress it a bit and see what happens. And look at that. So for a very long time, I mean, here was your end of your ABC, and then here we got the reversal. And look at this, is another thing I want to point out. If you want to know how long a correction can last for, just always look at the Great Britain pound CAD. Look how long this correction lasted for. This correction, this was obviously your first move up, and we between the top and the bottom, everything inside here, remember the rules, will be classified as a correction. And then there we had our first impulse move, and this was a very messy wave, and then we had our second impulse move. So this correction over here lasted for almost 3 years. If you look at the 3 September 2010 it started, and it only ended on 7 March 2013. And then if you scroll, you will see that there we had the reversal, and it actually just shot up like a rocket. You will you'd have made a staggering amount of money had you traded that impulse move up. I mean, let's just say you traded the first 3 moves. I might have to compact this just to show to you. So here we can all agree that we broke the correction over here. And then somewhere, let's say somewhere in here, we could have gotten into the trade, into this running flat, and we could have gotten in there. So let's say we got in right there. So let's mark that. Let's say we got in just above the top there, and we traded it all the way to your first 3 moves. So basically you would have traded this 1, 2, 3 move up. So let's mark this impulse and see if it actually got to the profit target, or 27% profit target. And yes, it did. It actually went to the 61. But for this purpose, let's say we traded it to the 27. Then that would have been a mind-boggling 3,216 pips. So if you see a move like this that's in a correction for a very long time, you can expect an unbelievable explosive move to the upside. And we actually have this on the AUD, if I'm not mistaken, New Zealand dollar currently. Let me just show you here. And this actually did exactly what we thought it were going to do. And let's see, just want to show you how long this this correction started, and we kind of think that, hey, the correction has ended, and so this correction also lasted 16, 17, 18, more than 3 years. So you can expect a very explosive move to the top side. And if this by all means goes to our 27% target, you can keep track of this trade. Say you get something like this and you get in there, this will be a fantastic trade to the 27. So if we measure that in pips, let's say we get in above that top and we trade this all the way to the top. It's also, I mean, it's nothing to scoff at, 1,182 pips. Okay, but not to get off topic, let's get back into the lesson, and let's go to a good example I want to show you guys is on the Euro JPY. Let's go there. So if we look here at the Euro JPY, let's make it a full screen. Let's get this measuring tool out of the way. So here we had this move down, and then we had this continuous divergence. So if we go into, let's try and go into a daily, you will see that this was actually an ending diagonal. So one thing I want to also stress to you, the way we will label ending diagonals is like this. An ending diagonal, you will always label 1, 2, 3, 4, 5, and then it will end and reverse to the top side. But this is how you label the ending diagonal, but the whole structure you would have labeled obviously A, B, C. So let's go to the daily and let's see how, let's just mark this spot so we can go to it on the daily. Yeah, let's mark that. So let's go to the daily. So what would have been our thought process here? So we got this move down, and then we, look at this peak on the MACD. Remember what I said, if you get a very, very sharp peak like this, your chances of getting the ABC is very high. So basically this would have been our thought process, that okay, eventually we broke to the downside, and we would have labeled this ABC, right? And this is what I meant is this is one of those rare occasions that if you get an ABC, you will still continue to go down. But we know in this case that this was because we had an ending diagonal going down. So our thought process would have been basically, let's just clean that up. Here we would have gotten this correction over here, this up move, and we would have traded this. And chances are we would probably at some point have moved this to break even, it would have come back down. And then we started to see this. And then when we got this short, maybe on a 1 hour or a 4 hour, you would have had a reversal there and a little correction. We've traded this again for it to go up. And at some point again, you would have moved this to break even, and it would have taken out again. So now coming here, we never had a correction there to buy. It went down again. So this is where a lot of traders give up on this trade, and they just say, stuff it, it's not gonna go. But this is this is actually where it starts to turn around. So you will trade every single one when you see something like this, and it's not very risky trades. As you can see, most of them would have been break even. So if you got this, and I can see inside there was a little setup, we would have traded this and we would have gotten this move going up. So this would basically be your thought process every time you get an ABC. And then when it doesn't go down either two fins, you get in the ending diagonal, which were the case here, or you are getting a channel ABC squeeze, as you can remember in the Great Pound JPY. So let's take another interesting example. Let's look at the Euro AUD, and let's start labeling from this bottom over here. So basically, let's get our MACD up. We had this impulse move up, and then we saw this move over here. So let's mark that, and this would have been your thought process when you saw something like that. Let's get there. So now you would have labeled this ABC, and you're expecting it to make a reversal or a bigger correction. But remember the exceptions we talked about, the expanding flat and the running flat, and this is one of those cases. So when you properly understand patterns and you look at this carefully, when we saw this, I said, wait a second, something is not right. So what is actually happening here? This is actually forming an expanding flat, and now only when we break the top, let's see if it did break the top. Let's measure the top there. We did break the top with a pip or two. So now only this becomes 1. This becomes your expanding flat. So this is still going to be a B, and this is still going to be your C move up. And then we are either, remember when we get an ABC, there's two things going to happen. It's either going to make a much bigger correction like this, and if you put a trend line and it breaks, you know that this becomes one piece and we'll get another move up. Or the second thing it tells us, if this is an ABC, is that, hey, this structure is actually over and we can expect a total reversal to the downside. So once I go into the patterns lesson, you will actually see how to identify when the market fools you like this. And if I can just go into a little bit here, is in a correction, remember what I said. Let's say this was your impulse, right? And let's make the correction blue. In a correction, you will always have two impulses going in the opposite direction. So if there's an uptrend, in your impulse you must have at least two impulses that you can identify. And if you look here we had one impulse, and then the second thing you need to know about corrections is your B wave in the middle will always be messy. So you will either get something like this or something like this in the middle. You know, that's very messy. And if you look here, we didn't have a proper B wave. So that's one of the clues that this could have told you that, hey, we're actually not looking for this, the correction isn't completely yet. We'll probably get another move like this. So this in the middle becomes your B wave, and this becomes your second impulse move in your correction. And only then, when we broke the bottom here, we could have said, okay, this move is over, we can maybe trade this to go and break the top, and then we'll have a proper ABC and the reversal. So remember, when we break the top, always make sure, but we'll go into the patterns lesson, we'll go into more depth, that you at least have, your, let's make this, at least have two impulses in your correction on a lower time frame. Remember, if you go into, this is a weekly, if you go into the daily, you'll probably see that in the daily, this is, you know, this is impulse moves here, and this is your messy B wave in the middle. So there we break the top, form the expanding flat, and now only you can look to get your next move. However it will look, it will either go explosive, or your C move will normally go very slow until it breaks the top and then reverses. The other thing you'll also notice is if you get a C wave, your chances of this going to our 27% target is rare. So, you know, if you go, say let's get into the trade there, we're not going to really expect this to go to our 27% target. We can still make some pips of it. I mean, if you, let's say we got into the trade there, and we, on the break here, we only wanted to trade it to the top. You could have still made a decent 1,462 pips. So that's basically how we will look at it if you start forming the ABC. And please don't be fooled when you see expanding flat. The other thing, you could have also have told you that this becomes one piece is when we broke the trend line. Then you could have seen, okay, shit, we are making a much bigger correction, and now only we will make the C move for your A, B, C. So guys, remember, the labeling is only telling us where we are in the structure, and you know, where we expect it to go next. And we will see this on anything you can trade. If you go to stocks, you'll see the same thing in stocks. But what I love about stocks is, and you guys can go test this theory for yourself, stocks, let's say you get your first impulse move, your correction, and then let's say, let me pull that, let's say this is your impulse move in stocks, and then you start forming your correction, and you'll pull your Fibonacci tool for your profit target. What I like about stocks is most stocks will make the correction, but then most of the times it will go to your 61% target and not your 27% target. I trade a lot of stocks, and I trade in stocks. I use a theory called momentum trading, as well as I don't know how many of you are familiar with that, but momentum trading is basically the theory is if something has been going up for a long time, and then it will, you know, in the future it will continue to go up. A lot of hedge funds uses this method. A popular one is the US hedge fund AQR. They use this strategy, and they do exceptionally well. And I myself has make quite a fair amount of money using this method. But that is beyond the scope of this course. But if you want to go look that up and use that in stock trading, it works pretty well. But your wave theory also works extremely well in stocks. So let's go to the S&P 500, and I'll show you there what happened in the S&P 500 and what we're expecting to happen next in the S&P 500. So here we are in the S&P 500, and what can we see? So we saw this first impulse move up. We saw a very nice expanding flat correction over here. Remember what I said, there's our two impulses in our correction, and here's a very messy B wave. So when we broke the top, I could have already told you, hey, this is close to reversing, and trade the next move up. So there's our next move up. So it's 1, 2, 3. And what do we see here? There's no divergence. So what we're expecting on the S&P 500 is for it to maybe form another correction like this and make another move to the top. So this will become your WXY, and now XY. So now we're waiting for the X consolidation and your Z next impulse move up. And if you look here, I mean, let's go to maybe a lower time frame and let's dissect this last move up, which actually happened. So we would dissect this last move up. This is a monthly impulse move, and so on a weekly we can actually see that, hey, we had this one, and there was our correction or running flat, there was a small crossover, and then we had another move up, and then there we had a regular flat, so, and then another move up. So this becomes what we had, basically no divergence, is WXYXZ. And now we are forming a much bigger correction, not a weekly correction but a monthly degree correction, and eventually we will go up, and we might get a similar situation like this to the upside. So as you can see, the same things you see on your currencies, you'll also see on your stock. And remember what I said, that what I like about stocks is it goes to the 61% target most of the time. I mean, look at this. So let's mark this correction over here we had. There was your running flat, and you could have traded this to the 61%. And then let's take the next impulse move. There was your regular flat, so let's mark that properly. And you could have traded this once again to your 61% target. So stocks, they like to move, especially the US stocks. I only trade the US stocks because, I mean, there's no other stock market that country stock market that can match the US stock market. So especially the US stock market, they like to go to the 61% target. So guys, that is basically all you need to know about the labeling and how we use labeling. And please guys, don't go and get into arguments with Elliott Wavers. We don't label the same as them, and if you show Elliott Wavers your chart, you're going to get into a big argument with them, because we use our own rules and we use our own labeling. So let's just go over the rules quickly once again for labeling. If you get a 1, 2, 3 and you have divergence, you'll label it ABC. If you get a 1, 2, 3 movement and there's no divergence, you will label WXY and expect the next consolidation and move up. And then only once this happens, you will label it WXYXZ. And then your 5 waves, but remember I've yet to encounter a 5 wave structure, but by some miracle, if you do get a 5 wave structure, it will have to look something like this. And in your impulses, you must have 5 subwaves. 1, 2, 3, 4, 5, and here you must have 1, 2, 3, 4, 5. Your last impulse must also be 1, 2, 3, 4, 5. And like I said, I've yet to encounter this on any currency or stock market chart. And then just quickly, but don't worry too much, we will, when we do patterns, we'll go into this, but we also do use ABCDE. But for now, all you need to know is when you get, let's say 1, 2, 3, 4, let me just label that properly. You get 1, 2, 3, 4, 5. So the only times we will use ABCDE is basically if you are in a triangle. We will mark it, you know, A, B, C, D. Sorry, it's A, B, C, D, E. So those are the only times we will use the ABCDE, is if we're in triangles, and the other scenario is if we are in contracting triangles. And then after your E, you'll get the next move up, and this is our contracting triangle. Look, A, B, C, D, E, and then you'll get your next move up. But we'll discuss that further in the patterns section. So I'm just quickly gonna, run through how you would do your labeling, just like a quick little practice exercise, so you guys can see how it is done. So let's say, okay, this is a monthly. We'll always start on our higher time frames, and we had this up move, and we had this correction, and then the next move up. So let's just mark this was this was our correction. And what we can see here is that we had no divergence. So the rules are, remember, we will label this, start your 0 there, right? You can label this W, X, Y. Okay, and then we will, okay, this move over here that we're busy forming hasn't crossed over to the 0 line yet, so this is actually still forming, but for now you can label this WXY. So now we can go into a weekly time frame, and let's say for example that was you know, the crossover, we had the monthly crossover, and then basically remember, this becomes now a lower degree than your monthly. So now we've already marked our corrections. This will become a W, X, Y, X, Z. And we can change the degrees. So like I always do, I start, you know, the monthly, I'll make grand super cycle, the weekly becomes super cycle, and you can use different colors for different cycles. So that's your weekly, and then we can go and label, if you can see here, we had the crossover, so now we can go and measure this part. Let's go backwards, find the lowest point, and then we'll go and find the highest point over here. we can go into a daily and we can go and label that. Now let's go to a daily. So what we saw here in the daily is we had this move up, and then we had a crossover there, which becomes like that, and then we had another move up, and then we had this crossover here. But here something doesn't make quite sense. If I can just show you here. Look at the size of this, look at the degree of this and degree of this. This correction is bigger. So what we can do then is let's go and filter. Oh, this is a 2, so let's just try and make it 1. Okay, so basically we had multiple crossovers here, and then we had small crossover here. So this, if you go and filter it, let's make it 2 daily, there it becomes actually more clearer. So, okay, so that is correct. So there's your correction, broke out, went higher. So now you can already see how much easier it becomes to trade this. I mean, if you got this and you trade this every time to the 61% target, you can make so much money. So basically what this tells us in this filter is we had 1, 2, 3, and then we had this move, and then 5. So basically we're going to be labeling like this. Let's take that off. This bigger correction is still forming. So now we can grab our WXY. We go WXYXZ. Also, one thing you will notice, guys, is when you get a WXY, between your Y impulse and your Z, so what I mean is between your Y impulse and your Z impulse, you will, a lot of the times you will get divergence. But you have to start at the, like we did it, you have to start here at the bottom, and then it becomes WXYXZ. And now we are forming a much higher degree correction. So let's take our last daily move, and it will be basically this move over here. So let's mark that, and then we can go and label that in the 4 hour. And let's get the top. There's the top. Okay. Let's go to the 4 hour, and we'll go label this in the 4 hour. So what can we see in the 4 hour? This is actually quite simple. As we saw this one move, let's just remember to make, I think this is still on 2, so let's go make it normal again. And yep, so basically as we can see is we had 1, 2, 3 move up, and then also let's see if we had divergence, and we'll actually have to make this bigger just to see if we did. And yes, we actually did have divergence. So now this becomes a ABC. A, B, C. And we mark our correction. There was our correction. And what do we know when we get a correction? We either get a much bigger correction or a reversal. In this case, on the 4 hour you had a nice reversal, but remember in a monthly this is forming a much bigger correction to go up again. So let's try and get our last 4 hour impulse and then go and label that in the 1 hour. So this is basically how you would do your labeling. So our last impulse on the 4 hour was basically that peak over there, and look at the size of that peak. So what does this already tells us? This already tells us that the chances of this making an ABC is quite high. So let's go, just this mark, go backwards, find the highest peak. So that's basically there. That's your little 4 hour impulse. And now we can go and label that in the 1 hour. And on the 1 hour, did it cross over there? We had a very small crossover. But if you follow your rules, you can see that this becomes one impulse. But let's say, for instance, this didn't exist yet, and you got this little impulse over here, and you went down, you would have labeled this WXY. And now this correction, this impulse and this correction becomes a higher degree. As we know, we form in a 4 hour correction here to go down to make probably be on a 4 hour it will probably be ABC. So that's basically it for labeling. Stay tuned for lesson number 7.